Talking about spreading out, let's go to Chicago here. And we have a lot of folks help us through the day. And one of those, Oliver Slope, normally here on a Thursday to wrap things up and look ahead to Friday. And Oliver kind of put things together. A little bit of a more active trade here in the last hour in the grain markets.
Yeah, the last hour is really firmed up across the board. Corn, soybeans, wheat, all catching a little bit of a bid and seeing some support come into the market, which is great to see. Earlier in the week, I was on Monday talking about the strength of the U.S. dollar, kind of putting a drag on things. But the grains are shrugging that off today, which indicates some good strength in the market, because if that U.S. dollar does pull back off of these 13-year highs, that should offer more support to the grains. Now, December contract that we're looking at for corn, 343 is where we pressed against earlier in the week. If we can get out above there, there's still a lot more resistance to go up to 347. There's a 50, 100-day moving average and a handful of other technicals. We are looking at possible weather delays in South America that are supporting prices here, as well as pretty good exports. But again, 343, 347 is a stiff wall for the bulls to get out above. Don't know if we'll have enough energy to get out above that to close out the week, but hopefully we can manage to break through that resistance to start next week's trade.
Yeah, it seems like it doesn't want to fall very far. We were below 340 for a while, and boy, it came right back up to the 340 level here. It didn't take very long, so there is a lot of support there under this market here. And as you said, no, what do you see in the dollar value here as we move forward? Can we go to 101 or 102 or fall back to 98, 97?
Nothing is out of the cards. We had Janet Yellen speaking earlier today. That definitely helped prop up the U.S. dollar. But I think a lot of this rate hike is already being priced into the market. So I think it's kind of a buy the rumor, sell the fact type of thing. People are getting positioned going into that rate hike decision. Because we saw the same thing last year. The dollar, caught a nice bid and a rally going into the meeting. And then when we did raise rates, we actually saw the dollar back off. So I wouldn't be surprised to see something similar here as we head a little bit closer towards that meeting.
Very good. So we're about 3 cents higher in corn. We take a look at soybeans. Oliver Slope, II Trader, joining us live from Chicago. And the soybean trade higher by nearly a nickel here now. Still January and March, though, just below $10.
Yeah, soybeans are really interesting. We've kind of been wedged in between the 100-day moving average at 994.5 and the 50-day moving average at 980, looking for either a breakout or a breakdown. Now, we're pulling a page out of the history textbooks for this one, looking at the July 17 contract. If you bought today and held on to December 28th, 14 of the last 14 years has ended in a positive note, with the average gain being 44.5 cents. So a seasonal play at hand here. Wouldn't be surprised to see that continue. But again, nothing's guaranteed in these markets. You still have to be able to manage your risk appropriately.
Boy, amen to that. Nothing guaranteed. Let's take a look at the wheat trade. Oliver will come back in a minute and talk about the livestock trade here. I want to get the folks one last look at wheat and give you those numbers here. December Chicago up 6 3/4 over 403, almost 404. Kansas City, the December up 5 1/2, 409, and Minneapolis been stronger all day. December nearby up over 4 cents, 522 3/4. Back to talk Oliver Slope and livestock in 1 minute. Be right back. Welcome back to Market Day Report. Mark Oppel, joined by Oliver Slope, live from the floor at the CME Group in Chicago. He is with II Trader and looking at the livestock trade. Oliver, some suggest here maybe the cattle trade has gone a little bit too far too fast, but cash markets say, no, this is right where it should be. What do you think?
Yeah, cash looks pretty stable. I think a lot of traders are kind of positioning ahead of tomorrow's cattle on feed report. I do also believe that we have come a little too far too fast. The chart's very constructive to the bullish side, don't get me wrong, but we are getting towards the overbought levels. Not necessarily overbought on the RSI. That usually shows when it's above 70. We're below that, more towards 60, but still the highest level since going back to March. So that indicates that the buying might start to exhaust itself, and wouldn't be surprised to see a pullback here. We're looking at the February live cattle contract. I think you could find some potential value on a pullback if we do fail out against these September highs where we're trading at today. I think 105 1/4 offers good value to the upside, with the ultimate target towards that 112 1/4 level.
Very good. I'll give the numbers here for those folks tuning in before we leave, but I want to get your thoughts before we do leave in the hog complex here. Again, Oliver Slope joining us here. Lean hogs a bit weaker in here, and now below the $48 level. We've been $46.80 at the low for December.
Yeah, and I think a lot of that weakness came on exports this morning. And really, over the past couple weeks, it seems that we've just been trading in that range, 45 to 48.5. We bumped our head up against towards that 48.5 level. We just are not able to see any buyers. It's what the traders around here call a buyer's strike. So we're not able to get some follow-through momentum, and it invites sellers back into the market. But we're not really doing anything too much until we get a breakout or a breakdown. Until then, I think a lot of traders are just taking advantage of this three-point range.
Very good. I'll have you back tonight. I want to give the numbers here and our cutout numbers as well. But we'll have you back tonight in our Rural Evening News and wrap things up for the day as we head to Friday. Thanks for your time here at midday. You bet. Oliver Slope, live from Chicago with iTrader. Let's get those numbers as promised and take a look at we do have the official trade estimates coming up here for the cattle on feed report. I'll have those for you as well. But here's what live cattle look like right now. This is up to the moment. The December futures contract 2 points higher, 108.22. They've been down about, what is that, about 40 points below that here, 107.80. Is the low today, but right now back to 108, 108.22 to be exact, up 2 points. February up 30 at 108.80. We take a look at the feeder cattle trade, and again, those November futures off the board here now, and they will be gone tomorrow. They've already closed out here, down 2 points, 126.95. January will be the lead on that top of that board tomorrow morning, and it is right now at 135 or 125.35. 125.35 is up 3 points. March also getting more volume, is up 27 at 121.32. If we can look at the cattle on feed report estimates that are going to be that are out now. Cattle on feed report coming tomorrow after the close, so it'll be Monday before we trade the numbers, whatever they might be. Looking for the on feed number, the average estimate down about 1%, 98.9 is the average actually. Look for placements to be down about maybe 3-4% or more, and the marketings during this is the number of cattle marketed during October, up about 4.5% from a year ago. All right, take a look at the hog futures one last time before we head to the top of the hour and hand back to Janet here. We are lower in the lean hog complex. Again, Oliver Slope not all that concerned about this decline we're seeing right now. December down 74, 47.28. February down 50 points at 54.02.